All right, welcome everybody. Thank you for coming back. We're here to talk about digital asset recovery. At the Bitcoin Association, digital asset recovery means something quite specific to us because we've recently released a toolkit called the Digital Asset Recovery Toolkit that enables on-chain freezing and recovery of stolen and lost assets. However, in the wider blockchain ecosystem, digital asset recovery means a lot of things to a lot of different people. Even backstage, we're having different conversations about what it means to you. So I'd just like to go down the line here, have everyone introduce themselves and explain your relationship to digital asset recovery.
So welcome everybody. My name is Marcin Zarakowski. I'm a board member of Bitcoin Association. We work together with Connor. So we also work together on the digital asset recovery as a set of tools. But I'm also wearing a second hat, and I'm a managing director of a project company called Token Recovery, which is going to be a one-stop shop for recovery of all types of digital assets. So not only BSV, which would be probably naturally for me to do, but also other types of assets. I'm a lawyer by training, and I'm really happy to be here.
Welcome, pleasure to be here. I'm Bieda, head of fraud investigations at CoinFirm. I have a forensic background. For the past few years, I traced billions of dollars in various crypto assets. I'm expert witness in courts on blockchain investigations, including US federal court. I trained hundreds of law enforcement agents on blockchain investigations. Some of the most infamous cases I worked on that I can disclose now is a Quadriga case, the DAO hack. You can read about my investigation in Laura Schiff's book, and 1,400 BTC stolen in Electrum phishing.
Hey, I'm Daniel Payne. I'm from America. I'm an attorney. My background is in securities law, and I'm now an in-house attorney for an ecosystem of crypto companies, and all of which have an interest in ensuring that the people in their communities who support their blockchains, who all have non-custodial wallets, that all of the assets that they earn and trade on these platforms are secure and recoverable. While at the same time, they want to ensure that one of the key significant benefits of blockchain, which is immutability, is there, even though they need to be able to recover assets sometimes if they go to the wrong place.
Hi, my name is Lavinia Osborne. I'm the founder of Women in Blockchain Talks, which is the #1 global educational and networking platform with DEI, diversity, equity, and inclusion at the forefront. We're global. We have a number of global chapters around the world, including Barcelona, Berlin, Warsaw, and other parts. And doing what I do, my assets were stolen, and I took my case to the High Courts of England and Wales, and in doing so, I set case law by receiving the first proprietary injunction in regards to NFTs. So, yeah.
Hi, I'm Brian Sanya Mondoh. I'm the founder at BlockchainLex, and I'm a PhD researcher at the University of Nottingham. What I do is I advise startups and governments on risk strategy and regulatory compliance when it comes to crypto assets. And I've been working closely with one of the leading solicitors following the AA Bitcoin case, advising entities on asset recovery. So essentially when a bad actor takes over a wallet and your assets are lost, we apply to court to try to get a propriety injunction and worldwide freezing orders to get the assets back to you. So other than my practice, I publish research and some of my work on decentralized autonomous organizations and NFTs has been featured on MIT, the legal forums on computational law, and yeah, so MIT, Cambridge, and lots of background stuff on that, which we'll cover later during the discussions. Thank you.
One interesting piece of blockchain technology in general is, in some ways, especially when Bitcoin first got popular, there was a popular narrative that it was anonymous, it was money that could be used by criminals and they could get away with things. However, one key function of blockchain technology is traceability and transparency. So Lavinia, you mentioned this process that you went through to recover your stolen assets. Could you walk us through maybe the most difficult part of that process, or what was easy, what was hard, or was it all hard?
It was all hard. So basically, we did use a tracing company. So they did, because of course, when you're going through the courts of law, everything has to be legal, everything has to be very transparent. So the legal process or the legal due diligence can be done in a way that the judges, because the judges are putting their names to these cases, especially when it's case law. So they need to ensure that everything has been done in a very transparent process. So we did use a tracing company. And the whole process has been very complex simply because, of course, one of the elements of blockchain is anonymity. So we're dealing with persons unknown. But then you're also dealing with the big boys in regards to the NFT marketplaces, the #1 in the world, whose name I shall mention. And so you're dealing with them, and of course, sometimes they don't have the processes in order to assist. I think it's getting better, but when I started the case last year, it was very convoluted. But, we made case law, and the judge saw, and I think the UK is very forward-thinking when it comes to looking at how we can utilize the laws that we have to try and regain the assets, as well as look at ways that we can create new laws in order to move the dial forward.
Can I jump in? Sorry, because I'm so curious about this. This is really interesting to me. Were you able to get the injunction without identifying who stole it? You just had to identify where the assets went and say, whoever owns that wallet, there's an injunction for moving it, and we're going to get it back.
Exactly. So yeah, it was a proprietary injunction I was issued with, and that's exactly the case. So, during our tracing, we found some names, but generally speaking, we still don't know who all the parties are. And as we know, it's not going to be one person. They're probably part of a bigger scope and a group of scammers, ultimately. So it was just based on the actual wallet. And one of the things we did during the case was NFTs. NFT was stolen from my wallet, so we sent the proprietary injunction order as an NFT. And now it's been done before, but what we did, it was the only way of doing it because we didn't have an address, we didn't have a phone number, we didn't have an email, we didn't have anything. So the only way we could send the legal documents was through NFT, and we, during the case, were the first to do that as well.
That's really interesting. You brought up an interesting part of that, which is this idea that there's a belief that these assets are somehow different than traditional financial assets or digital assets. Brian, can you talk us through the process from start to finish? Number one, explaining to judges, is it difficult to explain to judges that this technology really isn't that complicated in comparison to other assets when it comes to stolen or lost funds?
Right. So before this, before crypto became mainstream, it's very hard for the courts to understand what crypto assets are and what they're supposed to do. And if anything happens, let's say the assets have been dissipated, how do you recover this? So the AA and persons unknown case, in the Bitcoin case, that was one of the seminal decisions in England and Wales. So this decision wasn't quite seminal per se, because other jurisdictions, New Zealand and Singapore, in the case of B2C2 and Rasco and Cryptopia, had decided this before, and it was possible to categorize crypto assets as property, okay? But let's now say England confirmed that position and said, yes, Bitcoin and by extension other crypto assets can be treated as property, so you can bring propriety injunctions, okay? But the propriety injunction has to be certain, it has to be, let's say, Lavinia's assets, Lavinia's interest in that property only, not the wider property in itself. So in the AA person's case, which has been applied in later cases, but kind of distinguished in other cases, which we'll shortly talk about, it said the claimant was looking for 3 remedies. And these are the remedies that clients come looking for. So you're looking for a propriety injunction, a worldwide freezing injunction. Worldwide meaning it's not restricted to England and Wales. So it can be somewhere in Japan or Madagascar, whatever. As long as there is reach within that jurisdiction, you can apply for a freezing order. Then the court needs to see where is the lex situs of like where is the ownership or where has the damage occurred. And then the other thing is, if the unknown persons, of course, as it suggests, they are unknown, but there's always a known party in these transactions. And the known party is the exchanges. Mm-hmm. So let's say, without naming names, there's exchange A, which is known. So you have to apply for something called, it's a disclosure order, basically, but they come in 2 forms, a banker's trust order and a Norwich Farm Call order. So it says, because you know who these parties are, because you did their KYC, you have to tell us. So the persons are unknown, but the known person has to snitch on them, essentially, okay? So, so it's those 3 orders. They're not straightforward. And you have legal nuances where, like in the AA persons, the Bitcoin case, where counsel did the application on notice, saying, we are bringing this case against you, okay? But some other cases are done ex parte, whereby you don't inform the exchange that you're bringing a case against them. So you have tensions where the court say, okay, fine, we'll allow a without notice application, and we can allow, and we won't allow that, okay? So it varies. So it puts the exchanges in a weird position.
Sure.
Because the exchanges, in some cases, are deemed to be constructive trustees because they have express or constructive knowledge they knew or ought to have known, okay? But a recent case just came out the other day called Pirazude. It's really fresh off the press. This is brand new case law. And it says the exchanges cannot be treated as constructive trustees all the time, because would you treat your bank as a constructive trustee all the time, or are they a bona fide purchaser without knowledge? So those are some of the legal tensions that we have, but they're all decided on case-by-case basis. Yeah.
Well, it's interesting you brought up exchanges. Like you said, there's a lot of burden put on exchanges when it comes to risk analysis, things like that. Roman, could you talk about CoinFirm's relationship with exchanges and how you help exchanges deal with processes like this, but also general risk analysis?
Sure. So at CoinFirm, actually, there are 2 main pillars of our services, right? So first pillar that we created back in 2016 was actually IML tools for crypto services that accept crypto, right? So you can actually instantly check the risk on a given address. And this risk is not only on this specific address, but it is propagated to addresses that interact with this address, right? So I had to learn this English word that I still do not pronounce it properly, which is instantaneously, right? So these assets can be moved, right? You can create more addresses. So this risk has to be propagated between the addresses, right? So exchanges use tools like CoinFirm's tool to check the risk. And here we help them. But on the other hand, the branch I run at CoinFirm, forensics, right, asset tracking. Here we kind of, they don't like me, the exchanges, because I told them, look, this asset has to be frozen, because I just traced, using our tool that can trace assets in real time, I just traced that portion of the stolen assets ended up on your addresses, right? And they have to freeze the assets based just on my word, right? Otherwise, these assets can be withdrawn from the exchange and cannot be frozen anymore. And it's a hard struggle for them, because on the other hand, you have the client, right? And it may be a bona fide trader in their view, right? And freezing millions of dollars of somebody, it's not an easy case, right?
Yeah.
How often does it happen that when you notify exchanges or they are notified through the system that they use, CoinFirm's product, that they need to freeze certain assets, that they just ignore it, they don't comply? Is it a common case or?
3 years ago, it was a common case, and then we started with our legal partners, we started to go against exchanges actually on the legal path, right? We have few open cases still. But nowadays, I would say from the jurisdictions that are cooperative, which is US, European Union, right, and part of Asia, it's easy. Like to freeze the assets for at least a few days, for 7 days, it's super easy. Sometimes even by contacting them on Telegram, they will freeze it and give us more time to provide a proper evidence. And that's why, you know, it's very important to act fast, right? With our legal partners, we trace assets in real time using our tool that traces automatically. Lawyers have the access to the tool. They get notified whenever funds are deposited to the identified cryptocurrency service and reach out to them, or ourselves, CoinFirm, reach out to them. We ask them to freeze temporary. Then we provide the full evidence of the assets flow, blockchain data, visualizations, etc. Right? Of course, there's a part that lawyers has to do, which is to get the subpoena, right, and so on. And we need to convince the judge, as you mentioned. Sometimes it's the irony is it's not as hard to trace the assets. It's harder to convince the judge what happened here, to explain this complex technology in 5 minutes on a small graph, whereas fraudster dissipated the funds into thousands of addresses, and the canvas, the graph is huge, right? So that's the challenge that we actually overcome, and we actually have a successful history of assets recovery. So we trace the funds, we frozen them, and we recovered them for our clients.
Great. Daniel, we're both from the great United States. Could you frame the context of this? How is the United States treating digital asset recovery, if at all? I'm really not familiar with, you know, we were talking about cases outside the U.S. here. Is the U.S. involved at all?
Well, I loved hearing what, and that's why I asked Lavinia, did the court require identification of a party to issue the injunction against instead of just a wallet? Because in the U.S., the judges absolutely would be looking for a party. I mean, that's what they're used to, and the blockchain world is something new and different than what they're used to. It's very difficult to get a court to understand they could issue an injunction against a wallet without having identified all the parties who control that wallet. Even one party would not be enough if it was known that there were additional parties working with them. So that's very difficult. The other issue is that, so the process of getting an injunction or using legal enforcement mechanisms to recover your assets requires, at a minimum, the courts, which is a public institution, but generally law enforcement or civil regulators. You could have the SEC, you could have the CFTC, you could have the Department of Justice, you could have state attorneys. So one of the challenges we have in the U.S. right now is that that side, not the private side, but the public sphere, the understanding of blockchain and digital asset recovery is probably a step behind. So we find as private attorneys and companies, when we have to talk to the other side, and I see this in cases we're not involved in, that a lot of times the government's understanding is a step behind. There was a case, it wasn't in digital asset recovery per se, but a few years ago in the US where, so Brian was talking about where the assets are actually held and where the harm occurred. And so a federal court was trying to grapple with a preliminary question to the merits of the case was, where does this blockchain exist? And of course, the nodes for this particular blockchain were all over the world. And I read the opinion that the court, unsurprisingly, decided that it existed in the US, which gave her jurisdiction to rule on the case. The nodes are all over the world. In my view, when a transaction is confirmed on this blockchain, It happens simultaneously across the world at the same time. It does not happen in the US, completely contrary to her opinion. Her opinion was that there were more nodes in the US, a plurality of nodes in the US, as opposed to elsewhere, not even a majority. And that gave her jurisdiction. I completely disagree with that. So anyway, the challenge is that the public resources you need to enforce a legal enforcement to recover digital assets, that understanding is based on a pre-crypto world.
So a lot of these challenges that we're talking about seem to be rooted in the fact that there is no way to freeze coins on chain or have some kind of mechanism on the blockchain to allow for freezing and recovery of assets. I'm not going to ask. I'm sure it was an extremely expensive process to go through all of these peripheral processes to get an injunction. Marcin, I know we've worked together at the Bitcoin Association on some of these challenges, but could you talk about the importance of helping regulators understand that blockchain technology really isn't any different to traditional assets in this sense?
Yes, so you've all pointed out all the inefficiencies of the process, right? We need to go to several courts if you have, if the assets or exchanges are located in different jurisdictions. It involves very lengthy and expensive litigation, which stops many people from seeking the recovery of their assets. So I don't know what's the average cost of a litigation concerning digital assets where you actually need to educate the judge. Yeah. We are talking about hundreds of thousands of dollars of legal fees, which automatically doesn't allow a large group of people to recover their assets.
What if you only lost $50,000 worth of assets? Well, you could have spent $500,000 to go recover it.
That's it.
You're out of luck, yeah.
And then you still need to be lucky. So you need to bet that the judge will understand your case. Then once you finally get the injunction or an order or a decision, you need to go with the help of companies like Roman's. You need to go to the exchanges. And what those exchanges do, and actually I'm happy that I can name some of them, right? Say, I'm not protected by the client privilege, so Binance, right? Can any of you tell me where Binance is really registered? It's a network of different entities spread across the globe with different jurisdictions. So even if you serve the injunction upon one of the entities, they will say, no, it wasn't Binance X, it was Binance Y. Good luck. Then you need to repeat the game. It's a very inefficient process. And I think if we want to see, and this is the theme of this conference, right? We want to focus on the utility that blockchain technology can bring, so a little bit more than cryptocurrencies. If we want to get mass adoption of blockchain technology as an infrastructure that can be underlying the internet of the future, right, we will not see it unless we solve this issue. Yeah. I cannot imagine a financial institution, a bank, to really use blockchain as their underlying stack technology, and then what if there is a client that is 70-year-old and she or him, they just forgot the private key? Would the bank tell them, sorry, if you're just unlucky? We have all those processes, right, where if you forgot your login or your password to your e-banking, you can recover this. I think this is what's stopping. It's one of the very large blockers from seeing the blockchain technology to get adopted. It's the recovery of the assets. This is also the questions that we hear from the regulators and also from large enterprises when we talk to them about the technology, the efficiencies and the utility that it can bring. One of the first thing they raise is this obstacle. It's not fully compliant because we are unable to recover or freeze the assets.
But then, it's been in the news, hasn't it, recently with Ledger talking about putting in a recovery process, Ledger. We're all aware.
Yes.
Right.
All right. So
they've been in the news recently because they've talked about putting in a recovery for your passphrases, and there's been a big hoo-ha. The CEO of Ledger has gone on to do a Twitter space town hall to calm down their followers, because it's like, well, this is what we signed up with Ledger. If we don't have our keys, you're not the owner of your keys, then you're not the owner of your assets. And so I think there is this sort of like versus two groups where it's like pure blockchain, you know, if you lose your assets, you lose your assets, and there's no recovery. And then there's the other side where, as you touched upon, mass adoption, most people want to have a way to be able to recover their assets, or at least their passphrase to be able to recover their assets.
And if we compare the sizes of those groups, if you sit within this crypto bubble,
Yeah.
you think that everybody thinks alike, that, you know, not your keys, not your Bitcoin.
Yeah.
But apparently, I mean, is it like what, 0.5% of the world's population? Probably even less. If this technology can provide utility for the remaining 99%, it can allow for banking the unbanked, it can provide, you know, microtransactions, all the other things, and they are not happening because this is stifled by this very small group that is interested in remaining anonymous, as they try to say. But we don't know this concept under our, you know, regulatory frameworks.
I'd like to add my own opinion real quick with this not your keys, not your, because the largest advocates of Bitcoin and blockchain repeat this, not your keys, not your coins. But I can yell 2 + 2 = 3 all I want. It doesn't make it true either, because any traditional asset doesn't behave this way, right? If you take the keys out of my pocket to my car, it's not your car anymore, right? So I think there are two sides, but in some ways there is one side. There's the element that ultimately ownership is an established legal process that isn't necessarily new, right? Brian, you want to say something?
Right. There's two competing schools of thought here. We have to understand decentralization as a principle. In its purest form, what is it trying to achieve? Speaking to a few techies yesterday, we are kind of at a place where we agree decentralization as a concept cannot be maintained in its purest form.
Yeah.
So we have to accept that it's an idealistic principle, but it's just not it. And we need to move away from that, okay? The other thing is blockchain is supposed to remove the middleman. So it's about custody, having your keys, having your control, because that's Bitcoin origins from the white paper. But we have to mutate and adapt and see things from the current realities that are. Because people are losing keys, people are getting rug pulled, people are getting scammed left, right, and center, and people are forgetting their own keys. So how do we remedy that? But if there's a way, like you're suggesting, your platform can hold the keys and you know there's remedies for that, it takes away the whole concept of decentralization. Because once again comes in the big brother figure that can take care of things when things go belly up, you know? So we have to just decide what it is that we want. Yeah.
Does anyone have any comments to add about this conversation? Or
No.
no? So another piece, you know, especially working in this industry for a long time, I've seen countless people come up to, so we presented on the Digital Asset Recovery Toolkit at a Bitcoin conference in Miami. And while the techies of the world come up and they say, you know, oh, you can't do that, it's impossible, whatever else, every single time there's hundreds of people that come up and say, you know, I had this wallet, can you help me get the coins back? And I'm like, well, I can't really help you. But I've noticed the industry is rife with, actually yesterday I was in the lobby and an employee came up to me, showed me an email saying, is this legitimate? And it was someone saying, you left $20,000 of Bitcoin in this account, please click, whatever, right? Why is this industry so rife with scammers, criminals, fraud? It seems to plague the entire industry, and where do you think that comes from? I'll open that up to anybody.
Opportunists, ultimately. And I think you see it in every industry. I mean, I remember I used to work in recruitment. I remember when recruitment first started out in the UK, it was full of cowboys. So it's just opportunist, and so it doesn't really matter. It's irrelevant what the industry is. If people feel there is an opportunity to scam people, you know, lack of knowledge. If you have a lack of knowledge that they have, then they have an element of power over you. And also, I think a lot of people are open to being scammed because they're thinking they're not an opportunist in the sense of trying to take advantage of others, but they're looking for an opportunity to, you know, level up and improve their life. And so, you know, if you don't take a risk sometimes, how do you know? So, yeah,
Yeah, and I think the people who are getting scammed, a lot of times, their risk tolerance is way higher in the crypto sphere than it ever would be dealing with a bank. Because they know this is unregulated, you gotta take risks and they see the success stories where people who took wild risks when it looked like, the coin was worth 0.0001, but now it's worth $10. So they feel like they've got to take a risk, and opportunists can prey on that risk tolerance being a lot higher from people who would otherwise not engage anywhere with these kinds of schemes in the pre-blockchain space.
That's a great point. I saw this meme, me thinking whether I should spend $100 on vegetables, on organic vegetables. I don't spend that. And me spending $1,000 on a meme coin, shut up and take my money, right? So that's a good one. But I've talked to thousands of victims in crypto, and those are all kind of people, up to the millionaires, doctors, people who we perceive are the smartest on the planet, right? We all fall into these schemas, we all fall into this because it's a new technology. And in my opinion, most of these blockchain frauds are same as the frauds that happened years ago, just new technology, lack of understanding, lack of understanding in law enforcement, lack of tools, like CoinFirm one, that helps you to trace it cheaper and faster, makes it difficult to trace, makes it costly to trace. And also a lot of criminals think they're anonymous in blockchain, whereas I see how many people, maybe that's a drastic example, I can tell you how many people bought child abusement materials on specific darknet website because I see direct connections from legitimate exchanges to this darknet website, right? So it can be easily traced, right? You just need right tools and right knowledge. And
I think one of the other reasons, I can only amplify what Roman said. One of the other reasons is this aura that was created around cryptocurrencies, that this is something new, doesn't fall under existing regulations, that we need to think of new ways how to regulate it. But in the end, the schemes, the fraud schemes are the same. The means are different, technology is different. The laws are still the same. You're all applying property laws that have been established hundreds of years ago. And it's my perception that this aura that was also supported by many of the representatives of the crypto community makes people feel that, yes, it's easier to scam.
Yeah. We have a couple minutes left. I just want to maybe go down the line. Where do you guys hope to see the industry evolve in this sense, right? We talked about all the challenges. What do you think can be done to improve digital asset recovery for average users moving forward?
Well, I can only say that I hope that the digital asset recovery that Bitcoin Association developed is going to set a standard that will be then adopted by other public permissions blockchains.
well, at CoinFirm we aim to be a standard for tracing, right? So automated, quick, because Froster can be quick, Froster can automate. We need to automate as investigators as well to overcome that. And yeah, when it's automated, it's cheaper, right? And yeah, that's the goal, in my opinion.
So I told you I've got these crypto companies that are my clients, and they all have private blockchains, and they have customers who buy nodes to run that support these blockchains. And those nodes, if you run them, you can earn digital asset rewards, and they go into a wallet. And the fundamental principle in this ecosystem is that those wallets are non-custodial, that our companies will not. And unsurprisingly, from time to time, they have somebody write in or call in and say, I lost my key, can you help me? And we say, look, right here in the terms and conditions, it says, we don't have your key, we can't help you. And inevitably, I'm their attorney, they come to me and they say, isn't there something we can do? This is a really important person, or we just feel terrible that they've run this thing, now they've lost. And I said, look, there's nothing we can do. And we from time to time, we'll go back and say, well, should we have some amount of custody so that we can act in this space? And unless there's some other solution here, what I would like to see is some way to have regulation that allows you to be a limited purpose custodian, where you don't actually have, you're kind of a secondary custodian. Because right now, if we were able to have those keys and provide it back to the customer, then we're the custodian, and we have a lot of regulatory obligations that come with that, which is why we are not the custodian right now. So if you could have some limited purpose custodian regulatory framework, I think we might take advantage of that.
Great.
My focus is always on consumers rather than the enterprise. So within my community, Women in Blockchain Talks, one of the things that we're offering is a legal helpline, because it's about accessibility. And if you don't know who to talk to, where to go, then you just feel lost, and that just puts you off the space. So one of the things that we're introducing is a way for our members, our communities, to be able to just ask the question in the first place: what can I do? What are my options? And I think it just provides people with a sense of, okay, I'm not alone, and there is some help out there. So that's one of the things that we're doing.
Great.
Right. I just think people need to understand the ground they're getting into, have a thorough understanding of what happens, what you're supposed to do and what you're not supposed to do. But the aspect of crime has been blown out of proportion by press, because they also don't understand what they're reporting on. When you look at the reports by Chainalysis and Elliptic, the figures of crime are not as what the press is suggesting them to be. So this is a new area, and it's more helpful than harmful. So people just need to understand what it does. And in terms of investor and consumer awareness, that's crucial. And the cost of recovery are exorbitant. So we need to find ways to help people get redress without having to pay such hefty sums of money. Yeah.
Great. Well, thank you guys all so much. Thanks.
Thank you.